member. I don't know how much you have left since then, but it will get back there. And this is where we launched our new model. So we had a traditional brokerage model for most of the time, and then after we raised our last raising round, we launched a model where we took the widget, which is like a 30-second buying experience, and we took our entire platform to give it to developers, building apps and websites to integrate it, and that sparked the growth that you see here, which obviously outpaced the market, which is great for us, but maybe not great for you guys. So I'm going to talk a little bit about the challenges of running an on-ramp like we have, and this is a graph that shows what you sort of have to do when you run a typical startup. You need to take care of your accounting, your legal stuff, you need to do PR, take care of your shareholders. And if you're running a startup or a company, ultimately when you incorporate, which is not always the case in DeFi, where you just have a bunch of team decentralized, you need to do this. Now, if you run a fintech company, the level of complexity raises another level, where you need to take care of your banking relationships, payment service providers, obviously your security, physical security, both, and cyber security. You need to be able to do fraud detection, you need to be able to handle compliance, and you need to do all the checks and balances in the back end. Now, when you do a crypto company, there's another layer of complexity. Like most of you guys obviously are from the crypto space, which deals with how do you handle liquidity, how do you handle your hot and cold wallet infrastructure, how do you handle protocol changes on a lower level, how do you handle all the crypto forensics, again, in a compliance environment. So basically, we decided to do this, which in hindsight is maybe not the best idea. But we did it, and with that we can save everybody else a lot of problems, right? So we created a platform, and I'll go into it a little bit more, where our partners can just focus on building a company. And if you have a company, then obviously you need to take care of your shareholders and your infrastructure. But if you just do a DeFi app, you don't even have a company structure, you can still use us. And then we take care of everything else. So that's the basis. But to give a little bit more of an example of how hard it is to get to the point that we have, I wanted to give you a little bit of an example of our struggles with, for instance, banking relationships. Just one of those little blocks in the presentation. So when we were in 2015, so yes, we've been around for ages in crypto times. We were the first company that were able to get bank accounts, and particularly UK faster payments. And the way we did that was by having to set up a subsidiary in the UK, and then we used our existing banking relationship with Handelsbanken to be able to lobby to finally, after a long time, get bank accounts. Now, what happened then is that we were stupid enough to announce it to the world, which then meant after 6 weeks, without any particular reason for it, from a compliance perspective or operational perspective, they just shut down our accounts. So, ironically then, we went into the Techstars accelerator, and with the whole premise of getting bank accounts again. So Barclays has the Techstars accelerator in London, and Barclays was like the clearing bank for Handelsbanken as well. So we understood later on that Barclays was putting pressure on Handelsbanken, that shut us down, and then ironically they did let us into the program to actually get bank accounts. And then we spent 3 months in the program talking to every level at the bank to actually get bank accounts. Now, what we didn't know going into the program, that they didn't even have a framework by which they could give us bank accounts. So the first month we spent just talking to everybody, and we went to the FCA, the local regulator in the UK, to Her Majesty's Treasury, down the street basically, with Barclays and Techstars, where we started discussing whether there could be a framework that could later on, a year from now, get us bank accounts. Long story short, we went to Techstars, and we ended up, excuse the image here that Cointelegraph made of me with the Barclay logo, but we ended up with a commercial deal where they paid us money to work with us and to integrate something with us, but we never got bank accounts. So that was just one example of showing the difficulty of building these relationships, and it just takes time and building trust, just like any financial institution, but in crypto there's a lot more skepticism. So we take care of those problems for anyone who's a developer, has a website or an app. And this is just to highlight sort of the things you need to take care of. So you need to take care of the payment infrastructure, your liquidity provision, On the compliance side, you need to obviously look at forensics, where the cryptocurrency coming from, where they're going to. You have great tools out there that we also leverage, like chain analysis. You need to do risk profiling, and you obviously need to be able to take care of the delivery, for which you need to have the infrastructure. So a lot of the building blocks that I showed you before. And then once you get that all right, you can get the process that we built. So it's about simplicity, and it's a 30-second experience that we built. But on the back end of that, there's a lot of things that need to take place in that 30 experience. So this is all that happens, and I'll show you visually then what it looks like for the end user. So easy enough. Oh yeah, that's okay. I'll take your class. Yeah. So this looks simple. This is what you expect from any financial company, fintech company. But in crypto, it's a lot harder to get to that stage. Just for us to get Swish M-commerce, we first got Swish, and then it took about a year just to get Swish M-commerce, where we could actually put our own company name on this. So it's really, really tough, but it's ultimately what you want. You want to have a simple end user experience where it's just as seamless as everything else. And then once you're in crypto, then obviously you can build awesome kind of cryptocurrency, DeFi apps, and so on. So to bring that down to the screens that you saw, just the amount that someone put in, the Bitcoin address, they accept their terms and conditions, and then they verify themselves. Well, in Sweden it's with mobile bank ID. And then you do payment in Sweden and Swish. Internationally is different payment methods, and then you get the crypto delivered, and all of that in 30 seconds. And that's for us really been the benchmark of how we look at delivering the ultimate experience to the end user. And we've extended that to selling now. Oh great, yeah, that works. So the same process, also the same sort of time frame where we want to bring people through that funnel to ultimately deliver, in this case, fiat money to them. By connecting them with the bank and do their verification with the identity. Now, I wanted to give you an example of an integration. Is Charles here? Could make it? No? Oh shit, Charles is not here. So Opera, Charles, who's leading the crypto team of Opera, he's been a great advocate for us. He was supposed to be here, but maybe missed his train. They're a great example of a company that integrated us for their on-ramp. So they have a mobile browser, you can download it now. I think Android, iPhone are both live. And they've created a top-up function where they're using Safello that they've integrated to help their end users. And what you're seeing in the video is essentially these couple of lines of code that they integrated, and with that, they're able to deliver this experience. So I'll show the video as well. So it's essentially the same, flow, but it literally took these 2 lines of code, and then of course our team helped with some customization, and you're essentially ending up with a native experience from the end user perspective. But on a development timeline, obviously it's a super quick thing to do. So if you're a developer, which I hope some of you guys are, and ladies, sorry, ladies and gentlemen, then this is where you can sign up to try it out. It would be great if the other logo show as well, but I think there's going to be, something is messed up here. Okay, I have to click through every part of the logo. Okay. is going to be a very effective presentation. So these are just some of the partners that we've been working with. Like a lot of wallets have integrated us. Mycelium, I guess, OG crypto people here probably know Mycelium best. Edge Wallet, which used to be Airbitz, Ripple Wallet, Toast Wallet, and in Sweden, Bitcoin.se, which is the #1 website for Bitcoin information. Oh man, this is gonna go slow. Blah, 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 blah. Yeah, more and more and more and more. So then I wanted to show you one preview, if this thing is helping along. Yeah. So next week, for I don't know if anyone here is a fellow user, the experience that we did on the widget, we wanted to bring it to our login experience, which we haven't touched since way too long, to be honest. So the last half year or so, we've been working on basically bringing the entire widget experience to a login experience. So this is just a preview of what we're hoping to launch in beta next week, so you're the first to see this. And on this, we plan to build a whole bunch of other stuff. And that's it for me. I have a couple of answers that I already prepared for you guys. So do you want to start a brokerage? Only if you hate yourself. Will crypto make me happy? Mostly bipolar, yeah. And should I build a DeFi app? Yes, because that's where the fun is. Does anybody have a question? Ask me anything. Also unrelated to the company. I'm fine with answering. Yeah.
What are the security features that you ensure
Yeah, the security features in what sense?
Yeah, you mentioned that the start numbers of the company.
Yeah.
You take care of it.
Yeah, so to be clear, we don't take care of custodianship, right? Because we do, originally our vision was twofold. On one end, which you've seen over and over again in our industry, once you take custodianship of funds, you become a much larger target, and you get hacked, and there's a complete mismatch with the balance sheet versus like the assets and your own capital. So we really consciously decided not to do that, as well as from the other side that crypto is a little bit about people being in control over their own finances. Not to say that we won't do that in the future. We obviously think about that a lot, and we have some plans for that on our roadmap. But it's still, the idea is having your own control. So other security is, of course, two-factor authentication where you log in, but that is basically reduced these days with like mobile bank ID, right? If you can do it with a full, identity check through either mobile bank ID here in Sweden, or Norwegian bank ID, NEM ID in Denmark, or Yoti, which we use like European-wide, then you already take that identity part away, which frankly, that's where you have the biggest challenge. Once you've covered that, most of the things that we're seeing, that is all social engineering. Like it is almost there's almost never a case where somebody's identity really is taken over unless it's under threat. So what you're really seeing then is social engineering, for which we have a whole bunch of things on the back office. Most of the security stuff I can't talk about because it's like obviously we don't want to publicly disclose what we're doing, because that's part of the secret sauce to be able to handle a transaction that happens in real time with an asset that is has no chargeback, no way to return it. But we have a fraud prevention page, so you can see what kind of things we're seeing on happening in the market, from investment scams to other kind of social engineering behavior. And we really try to warn users, but on the back office, how we deal with that, from a security point of view, as well as an anti-money laundering point of view and a fraud prevention point of view. That's our secret sauce, of course, and it's the hardest part to do of our business. So yeah. Yeah. So all of that stuff you don't want to deal with. So we also take care of the support. We take care of compliance and all the other things. So when you have an app, you don't have to deal with any of those factors. More questions? In the back.
Yes. So how do you price single assets on the platform? How do you prevent things like wash trading affecting the pricing of single assets?
So we are not a peer-to-peer exchange, right? So there is nothing like that. We don't allow customers to trade on our platform. We are the counterparty, and we have liquidity provision with different liquidity providers where we source the crypto. So there's none of those things like wash trading that takes place where you deposit money on a peer-to-peer exchange, where you then have to you need to take care of those things. That doesn't apply to us. We're a brokerage model in that sense. We're just doing delivery, and we don't deal with an order book.
How are these single assets priced?
So we typically follow our liquidity, not typically, we follow our liquidity provider pricing, and then we put our fee on top, right? So the spread is our fee that we put on top of it. But we show that transparently, so if you're going into the widget or into the login experience and you type in an amount, you will see right in real time what the fee is that you're going to pay relatively to the amount that you're putting in. So we're very transparent about what we're doing there.
So the price is basically the market maker plus the fee.
Yes, yeah, correct. Yeah.
What is your vision of crypto mass adoption?
Ooh, that's a big question. What's my vision of crypto mass adoption? So when we started in 2013, and I think for who here has been around in crypto since 2013? Yeah, very few hands, but less hands than who knows Safello, which is, I guess, good. I mean, for us, it was about payments and really seeing mass adoption come from usage. And I think both the companies as well as the protocols have not gone to that level quickly enough. So since then, it's all just been speculation. It's just been speculation still today. I do think with the dApps that we're seeing now, it can move in a different direction, and I think the payment theme is going to return. But primarily, it is a store of value. And I think there's nothing inherently wrong with it being a store of value today. That's a good first use case, and the big task for cryptocurrencies haven't happened yet. All that time since 2009, there's not been another bear market. No like stock crash. So we don't know yet how cryptocurrencies are truly going to behave when we're going to see a real recession. Which I think anyone who has been following it for as long as I have is sort of also curious to see, will it hold up as a store of value? Then separately, I think with stable coins and all of the developments there is going to be a reemergence of the payment theme. And then from our perspective, the way we're looking at it, obviously we want to facilitate that in and out point. And then from there on, we want to add additional features to developers and people that have a crypto audience and outside of cryptocurrency audiences to either bring them crypto and have another functionality that can be implemented, so more use cases can be activated. I still think it's going to be probably speculation for at least the next 2 years, but there's a lot of activity happening in the DeFi space. The dApps, even though adoption is still quite low. More fun.
How do you manage liquidity and cash out?
How do we handle liquidity?
Liquidity, yes.
Yeah. So liquidity in the early days was really, really hard. There were almost no companies to find, obviously no banks to find. It really is directly related to sort of how long you've been around, how well you're financed, whether companies, the larger companies in our space, are willing to work with you. So I mean, we're backed by Northzone, Lifestyle Capital, and Digital Currency Group. So through our network, we basically have access to all the large companies. So we have direct connection to the large exchanges and the large OTC providers, which gives us access to liquidity. Which means essentially that either we have connections on the API level, where we can directly trade. We trade with the different liquidity providers, but also we have access to OTC desks, to where, let's say, our liquidity would run out, we're still able to trade with these OTC desks to get additional liquidity quickly into the platform. So that really provides scalability, especially with bull markets. We've been through 2 bull markets and also the bear markets, and it really is about how quickly can you scale up, and also sort of how quickly can you scale down as well, both with personnel, but also with your exposure in different markets and liquidity where you have a part. So yeah.
Are you using funds to kind of trying to from a cryptocurrency tax, so recently offset the tax on the 40,000 Ether and solar, some of these usage on themselves for.
So the question is, how do we deal with funds that should essentially be blacklisted because they've been have like nefarious sources, right? So I mean, we're connected to crypto forensic company, primarily Chainalysis, not only Chainalysis. We're the propagation of like how funds flow through the blockchain is pretty transparent, and it's a lot more transparent than a lot of people think. So it's really, it gets blacklisted. Those funds will get blacklisted. I mean, sorry? Well, just to give you an example, right? Chainalysis, it happened yesterday, I think, with the $350 million. Like this morning, there was an email from Chainalysis in our inbox saying like, this is the address that came from. We haven't seen activity, blah, 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 blah. So it's like, obviously, when we're talking about the magnitude of these kind of nefarious things, then, it's right on there. With smaller, more local, like let's say dark markets, the time delay can be longer before it gets like fed into it. But companies like Chainalysis, they do also work with exchanges to see those connections and to feed through their database. So it gets a better and better, database of transactions. Which, interestingly enough, originally before Chainalysis was around, was like a big no-no to talk about blacklisting coins, but both on a regulatory side and from a technical side, it's totally to full, transparency. And then Monero is getting blocked everywhere. So yeah, we're in that age of traditional financing crypto, I suppose. Anyone else? Yeah.
Do you take some measures against terrorism, financing of terrorism?
If we take measures against, I mean, we follow the European anti-money laundering directive already from when we started in 2013. Now, the precise things that we're doing, a lot of it is actually behaviorally driven. So all the things that we're doing through our platform and how people are trying to compromise us and those kind of things. And then on the money laundering side, there's a whole bunch of things that we're doing, which is harder, but that I cannot really disclose publicly on what we're doing. Both sides is, we can't disclose what we're doing precisely to battle, money laundering risk and terrorist financing risk. There are like the usual things like patent sanction list of companies and people that you are not able to, should not interact with because they have an affiliation with terrorism. That's the basics, but there's more to it specifically related to crypto. That we do. And a lot of it has to do with behavioral, based on things that you're seeing and patterns, as well as data that's fed to the system from third parties, like, let's say, Chainalysis. We don't serve no, absolutely not. I mean, we're a financially regulated entity, right?